Good morning and welcome to the Gold, Goats, and Guns market report for Sunday, 21st of September, 2019. Doing this a little early. I think I'm doing this a little under-caffeinated because that hurt to get out, actually. So, I don't know. It's caffeinated coffee better than a leftover cup of tea from the night before that I didn't drink. Just start your day. Trust me on this one. All right. Shout out to all the new patrons. We have 4 or 5 of them this week. We released this month's issue of the newsletter and a couple other things, and coverage on Saudi Arabia seems to be popular. So welcome to all the new patrons. We do greatly appreciate you showing up, and I hope I can keep you both entertained and informed. Probably can keep you informed. I don't know about the entertained part. We'll see. Are you not entertained? All right, there you are. All right, so we have our Maximus moment. Let's move on to the stuff. All right, so let's talk about the Saudis. And I for those of you who have been with me since my days with Newsmax and Resolute Wealth, you'll know that I've been calling for this moment in time for a long time. I've been saying that the Saudi Arabians have been trapped since the days oil started to break down and their budget deficit blew out. And everybody was calling for the end of the Russian Federation because, oh my God, the ruble is collapsing, and oh my God, they can't pay their bills, and blah, blah, blah. And just went, it was like listening to, it was like listening to a CIA fact paper, for Christ's sake. It wasn't media, it wasn't coverage. Meanwhile, the Saudis were running a 25% to GDP budget deficit, and the Russians were running a 3% to GDP budget deficit. The Saudis have a AAA rating. The Russians were pushed to junk bond status, and just the way things are. So just understand that nobody is neutral in this, and when anybody makes the argument in public, especially in the media, especially when discussing any of these things. And they make these arguments that are straight out of whatever the media was telling you. You have to just look at them and go, you do realize that that's all a lie, right? You have to realize that 90% of what you're told isn't real. That this story may have some weight to it, but there's this other story over here that's far more important that they're not covering. So we've reached that moment where the Saudis and their policies have reached a terminal point. There's no way around that. There's no way to sugarcoat that. From every perspective, economically, financially, politically, diplomatically, and even perceptually, they have reached their end. They can no longer buy positive coverage in the media that anybody believes. They can't set the terms of engagement within OPEC. They can't win a war against starving rebels in Yemen. They've ticked off Qatar to the point where Qatar is no longer a cooperative member of the Gulf Cooperation Council or OPEC. They've alienated the Russians. They've tested the Russians' patience to the point of leaving them out to hang in their fight against Iran. They're still running a 7% to GDP budget deficit with oil at $60 a barrel. Wait till it goes back to 50, possibly 45. Because that's actually what's in the cards. And we're going to talk about oil this afternoon. I've got my charts up for the day. We're going to continue our series, our current kind of look through alt space in the crypto markets as well. We started with, on Wednesday, we covered Dash. Today we're going to cover Litecoin. I'm going to do, I got about 6 or 7 of these I'm going to cover. If there's any in one in particular you want me to cover, just let me know. I'll be happy to do a chart review of it. I don't know, I might not know the project itself, but or much about it, but I'll be happy to do a chart read, both weekly and monthly, on any crypto that you're interested in. that has at least enough data that I can actually look at. Just pop in a comment down below, and I'll get it done for the next market report. But the Saudi desperation is real. It's probably also feeding into what's going on with the Fed having to open up an emergency repo window. Look, this is sincere. This is real. This is a problem. The Fed didn't want to do this. My base case scenario is that it's Goldman Sachs that's in trouble. Either because of the failure of the WeWork IPO, anything surrounding Aramco. Could be Deutsche Bank as well. There's no, I know that Deutsche Bank and UBS were added as book runners to the Saudi Aramco IPO this week, and so everybody is on edge. This attack was a big deal, and I'm coming down to the conclusion that it was absolutely the Houthis with Iranian technology. The more that the usual suspects, now we have Dominic Raab, the current British foreign minister, coming out and saying this no way possible that this could have been the Houthis. Look, no one wants to admit that the Saudis are so inept at defending their own territory, and thereby defending the biggest IPO in the history of the planet, and that they were knocked out with some drones. Like I don't think anybody ever wants to admit something like that. That's the kind of weakness that this guy, bin Salman, will never admit to. And he's completely incompetent, and he's completely insane. And we have to think of him in those terms. I don't know about insane, but he's incompetent. And like Trump, he has a lot of ideas that are good for his country. Implementing those ideas, however, well, dude, that's where the rubber meets the road. It's one thing to specify, what the problem is. It's another thing to craft a strategy to implement that the fixing of that problem. That's a completely different thing. And a guy like bin Salman lacks both the experience and the temperament to achieve those things. And I want to be, and I'm going to be frank and honest, and I've been honest about this. I don't think Trump has either of those things either. And it's a shame, because he had a great moment in time and a great opportunity and goodwill and all the rest of it to get it done, and he's not getting it done. He's doubling down on this alliance between Saudi Arabia, Israel, and the United States at a time when he shouldn't be, when he's hurting both of these countries by doubling down on his support for them. This is classically getting sucked into a quagmire that you can't get out of, because both of these countries that we're dealing with outside of the United States, Saudi Arabia and Israel, are far more aggressive than they either could be or should be if not for nearly unlimited U.S. support. They would have to figure out a way to live with their neighbors. They would have to act like normal countries. And we can sit here and go back and forth as to who started it and who didn't, and yada yada yada. But at the end of the day, what's the goal? If the operational goal is peace in the Middle East, then more weapons and more soldiers and more troops and more belligerents and more sanctions and more isn't going to get it done, because all that's ever done is increase tensions and increase the chaos. But that's been the policy. While they sell it to us as if that policy is the only possible policy, because these people are animals. And this is the way it's presented to Americans. It's the way it's presented to a great number of us. And it's nonsense. It's far more than nonsense, but I'm going to keep it clean today. So. And this ties into what's going on with the Fed. The Fed doesn't know the Fed knows what's going on. They're not going to tell. And they're another one. They're a bunch of incompetents that won't tell you the truth. Because if they tell you the truth, all of a sudden everybody would freak out. It's the same thing that's happening in Germany. Germany won't tell you the truth. They won't tell you that the fact that they've been sitting with a manufacturing PMI of 44, which anything below 50 is considered contraction, since February. But no, there's no way that they're actually in a recession. And they keep disappointing the markets, and they keep practicing fiscal austerity while then immediately turning around and having to gut, or are planning to gut, their manufacturing base. I saw the headlines this week. There's a number of things. Merkel has caved to the Greens because she has to, because the Greens are now polling at 23% nationally. The Social Democrats, who she's partnered with, are literally collapsing into irrelevancy. Another thing I called the day it happened. When the German elections happened in 2017, I said, they're done. The Social Democrats are done. They're going to drop below the 16% chasm, and they're going to collapse. Now, did I really see that the Greens would rise to this extent to take their place? No, I didn't, and that comes from my inexperience in dealing with how deeply entrenched leftism is in Germany and radical environmentalism. But that's fine. That's only going to last for so long until, at some point the split in Germany is going to probably, once after the EU finally gives up the ghost, which is going to happen. In the long run, I fully see the beginnings of a functional split between East Germany and West Germany, back into two separate countries, but not based on and the interesting part about it is that there's a communism that's going to be in West Germany, not in East Germany. Well, the East Germans all go, no, we don't want any more of that, baby. No, I ain't going back there. Because that's where AFD is strong. And if you look at what's happening long term, as the older generation of Germans dies off over the course of the next 10, 15 years, you're going to see this functional split that happens within the German electorate, which is going to bifurcate between, basically AFD and the Greens, and what are now currently the CDU, the Christian Democratic Union, represented by Angela Merkel, and the SPD, the center-right and the center-left parties of today, the CDU and the SPD, are going to morph into AFD and the Greens. Because when you looked at I mentioned this earlier, and when you looked at the demographics of the results in the state elections in Brandenburg and Saxony, you saw that AFD was the most popular party amongst Germans under the age of 44. Meaning it was just old, German baby boomers. Not baby boomers. It's an absolutely bad assignation, but the same generation, the post-war generation, that's what's still fueling or allowing people like Merkel to hang on to power. But now she's having to cut deals with the Greens in order to stay in power, and she's doing this, of course, in order to ensure that Italy is tamped down, that Brexit is betrayed, and all of these other things happen before she leaves the scene. This all has to be done before Merkel leaves the scene in 2021 or 2020. It's 2021. It's every 4 years in Germany. It's 5 years in Italy. So, and amidst all of this, gold is relatively stagnant. I'd say that this. I think I just ran out of nations or Asians to rhyme with this morning. Gold actually has a very interesting setup for this week. So, again, what's important here from a market perspective is that if Saudi Arabia falls, right, Trump is going to move troops into Saudi Arabia and the UAE in order to defend the oil infrastructure. This is exactly what the Iranians want him to do. They want him to put American troops at risk here. Okay. Well, what's that going to do? It's going to stabilize the price of oil. Oil is an oversupply. This doesn't help the Saudis in any way. The Saudis need $80 a barrel oil. Trump moving troops onto the Arabian Peninsula is going to ensure that it goes back to 50. So the Saudi Arabians effectively, what's going to happen here is the following. In fact, think of it this way. $400 billion Aramco IPO. Oil drops now from $65 Brent to $50 by the end of the year if no more hostilities happen and the war premium comes off of oil. $50 a barrel. Well, that's a 15% haircut on what they're bringing in. So effectively, discount the Saudi Aramco IPO by 15 to 20% this year, because that's what they're going to have to spend to cover the hole in their budget deficit because of the drop in the price of oil. Because they're already at a deficit, so they're going to have to add even more deficit spending. That money's going to have to come directly from whatever they raise from the Aramco IPO. They're only going to see $350 billion of that money. The other $50 billion is going to go to the book runners. or whatever they're going to get. Off the top of my head, I think they're going to lose, you should lose anywhere from 10 to 15%. I may be overstating that. And the deal that big, maybe as low as 7. And anybody, please correct me if I'm wrong about those numbers that would know about this kind of financing deal of this magnitude. And maybe, the deals for them may be lower than, but this doesn't matter. They're going to see less than $400 billion. That's got to go to the book runners. That's got to go to, it's going to go to the underwriters and all the rest of it. And then whatever drop in the price of oil happens between now and the end of the year, like into 2020, at every dollar for the price of oil, that you can almost, discount it by, for every dollar that the price of oil averages below $60 a barrel, the Saudis are going to spend X amount of money on their budget, which has to come from the money they just raised for Aramco. So they're effectively discounting Aramco by 10 to 15% a year if oil continues to stay in undersupply or oversupply, which it's likely to do going forward, because the strategy to keep Venezuela and Iran off the market has failed. Because the Chinese are cutting deals with the Iranians now left and right to import oil, giving 2 fingers up to Trump. Once Iran officially leaves the JCPOA, which is still their ultimate card to play against Trump, they will then agree to the Russians' offer to buy and resell and market up to 1 million barrels a day of Saudi oil, and they have both a goods for oil deal as well as a pledge to buy and resell Iranian oil at a rate of up to 1 million barrels a day. Okay? Do you understand what's going on here? Like, Iran could wind up exporting more oil now in like 3 months than they were before Trump cut them out of Trump put sanctions on them. You could easily see them back up to 2 million barrels a day export. And if that's the case, this whole thing collapses. Now, Trump knows that this whole thing collapses. He knows he's behind the 8 ball. All he ever does is raise sanctions in order to give red meat to his base. But that's all that is. The Iranians and the Russians and the Chinese and the Turks and the rest of them all have the financial plumbing now to completely bypass the dollar and completely bypass all of it. And it's the Saudis who are stuck with the petrodollar. They can't get out of it lest Trump pulls all of the support for them. That's the deal. That deal's in place and it's not going to go anywhere. So it's literally watching the Saudis hemorrhage money, which, as we all know, is the source of all their power. So as they're hemorrhaging money left and right, their money, now they have to pay even bigger bribes. They've got to pay even bigger costs because everybody knows they're in desperation mode. Then your costs rise even more. This is where they are. The past is not prologue here. The past is prologue in that it's going to be an exponential growth curve or an exponential collapse curve for them. Everything's fine, and then but then the costs start to rise exponentially because the only reason they're still in power is they keep buying people off. When everybody knows you're desperate to hold on to power, the bribes keep rising. Well, what do you mean? Last week it only cost me $1 million to get a bespoke article in the Newsweek. Well, to this week it's $3 million. And if you don't think that that's going to change everything about the way everything is traded, go back to watching CNBC. All right, let's go on to the charts. I'll get you out of here. All right, so gold. I was really encouraged by Friday's quad witching day in gold. It's pretty obvious that no one wanted to go into the weekend short because it was a massive rally into the last 2 hours of the day on gold. It was, it looked like the computers have been turned off, and we were gonna close right at 1,500. There's obvious. There might have been something in the futures market and the options market to make sure that we were sending around $1,500 gold, 3,000 on the S&P, yada yada yada. I didn't look at the open interest charts on GLD or anything to see if that was the case. I just the market will more often than not tell you, but then to see a $20 or $15, $18 move into the close. But it happened after after the COMEX closed. So that makes sense. So after the COMEX closed and all the options expired on futures, right? For the week, no, the options on futures don't close until the end of the month. Never mind. But after the COMEX closed is when there was that 3-hour window where you could see a move in gold. They were going to hold it at $1,500 plus or minus a couple of dollars, and then we saw that big move into gold. And what that did, regardless of what the guts of this thing are, and again, sometimes I'm out over my skis, but whatever. The reality is that this very weird formation, again, I keep coming back to that bar and saying, this makes no sense. Open high, close low. Wow, it's like the most boring blow off top of all time after a big rally, and then this 3-week downtrend, and we even got a break of the previous low. So it meant that no rally in gold was likely to break that one, because then we would have had an engulfing bar here up around 1530 or so. But most of this, we were trading at 1500 plus or minus for most of the week until the final couple of hours. And so it's interesting. It sets up a couple of things that are interesting. One, it closed nearly high, like within 20 cents of the weekly high. So the likelihood of gold breaking the previous high this week is very, very high. It's nearly 100%. It is, for all intents and purposes, 100%. And the possibility of it breaking this low is just 10%. So we got 10% pot odds we're going at least a little bit higher. So you could buy the open here, for example. If the open is anywhere close to the last week's close, and that's what these statistics are always predicated on. I take last week's close, plug it in, and see what the percentage case may be. You can almost buy this week's open if it's anywhere close to last week's close, and you've got 10-1 pot odds. You're going to make a little bit of money to the upside. You're going to get a break, and it's going to run to somewhere. And it most likely will run up to the previous high. So there's about there's a very, very, there's 10-1 pot odds. You got a $15 move. But that also sets up a 70% chance of breaking through that. And once you break through that, now we're looking at a potential 2-bar reversal. So this is a very strong technical setup for gold to bounce here, and for this 3-week downtrend to be exactly what it looks like, which is taking a breather in a powerful bull market. If we don't get that reversal here, we're going to chop between 1500 and 1550 for the next 2 or 3 months. That's the way I would read this, and see if I'm wrong. All right, so that's gold. It's a very interesting setup, and if you are actively trading these markets, these are your numbers. Brent crude. I didn't really want to put up the chart of Brent crude this week because, well, what's the point? There's nothing. You'll note there's no annotations. There's no numbers. There's no snarky little boxes with arrows pointing out. There's none of that stuff. There's just the chart. And I keep going back to this. This is a very weird pattern. What a shock. The markets are in desperation mode to hold everything together. So we have a desperation mode here where we don't want to see the price of oil. Someone doesn't want the price of oil to break down. Cough, the Saudis, cough. And so we always open low and close high and create these 5 non-trending up bars in a row. Like, seriously, this is it's comical, honestly, in how bad the market manipulation is here. But then we have the spike on Monday, and by the end of the week we're trading down here. So this is the week after the attack on Aramco, and look at the situation. Because again, go back to it. The Saudis need $80 a barrel oil, but at the same time they can't show weakness in Aramco's infrastructure because otherwise it threatens the IPO. So. You want higher oil prices, and Iran is becoming set to become a major exporter again. Fine, you want to push the price of oil to $80 a barrel? Great, let's do that. Okay, more money to funnel the Hezbollah, the PMUs in Iraq, the Houthis, and the rest. Because that's what's happening here. And the thing about it is I have read enough stuff from Iranian sources, not Iranian government sources, but non-governmental sources. It's pretty obvious that the sanctions aren't working to do anything other than strengthen the Iranian regime in the aggregate. Yes, there's a lot of unrest at home. Yes, people are upset, and they're under a lot of duress and stress. There's no argument that the sanctions aren't hurting Iran. Never argue that. But you got to remember something. These are people who have been under constant economic distress for now 3 generations. If you don't think that they're hard, like hard, tough people, that this hasn't bred hard, tough, no nonsense people. This is the very thing that people talk that you talk about. That which does not kill us makes us stronger. That which that conflict and pressure bring out the best in people. They don't collapse. It's when you live the life of luxury that you don't have to work very hard. You can just, relatively speaking, emotionally, you don't have to work that. You don't have to work nearly as hard. When you're at rock bottom and you're forced backed into a corner, that's when it's fight or die. And that produces stronger, harder, better people in the long run. And 70 years of U.S. attacks on Iran have not made the Iranian people weaker. It's made them stronger. Okay? Subsidizing Saudi Arabians for the House of Saud for the last 70 years has made them weak. Emotionally, physically weak. It's why they're going to be easy for them to take over. It's why the Houthis can attack them and win. It's why the Saudis can't raise an army that anybody cares about or anybody is scared of, and they have to buy mercenaries to fight their wars for them. Okay? And it's bound up right here in the Brent Crude Weekly Chart. At the end of the day, Iran will survive at $60 a barrel oil. They'll thrive at $80 a barrel oil. And even if it means that extra money, only a portion of it goes to, gets pushed out into the general economy as opposed to going for more weapons and more defense, I'm telling you, the vast majority of Iranians at this point are going to be okay with that because they understand the problem. It's a war mentality. We don't have a war mentality here in the United States. We think we do. We don't have a war mentality. And it's going to be very interesting to watch. We'll see what happens with this going forward. Because when you're on top of the world for as long as we have been, it's almost long enough. Almost. Not quite yet. Almost long enough for us to have rotted so thoroughly from within that we're not going to be able to get over the shock of one of our aircraft carriers getting destroyed. I'm not giving that a high probability, but I think that Iran has game planned this for maximum psychological shock. Whatever they're going to do, if we decide to go to war with them, whatever they're going to do is going to be done in such a way as to impose maximum psychological shock on the United States. That might wind them up with getting freaking destroyed. But they may be willing to do that to take us down. You never back people into a corner. You never know what they're going to do. And Iran has asked multiple times, let's end this. Let's get back to work. There's money to be made. There are people's lives to. We don't need to do this. But some people cannot be placated. I don't understand it. It ain't me. It ain't my life. Well, it is my life. It ain't the way I would do things, but it is what it is. The Brent Crude Weekly Chart is very interesting. This failure to get a significant breakout. This is a terrible bar. This is a bearish bar. This is all you need to know. All right. In the altcoins, we have Litecoin. So on Wednesday, I showed you how Dash put in a very strong 2-bar reversal and then followed through. And actually, Dash, I think, closed this week closer to 100 than to 95. I think it closed around 98 or so. I didn't check the close, but it was a strong close. I don't have the number immediately from memory that I can bash out, but it was still technically significant. Here we have the situation in Litecoin, we had a massive drop, 5 weeks ago, and then definitely a blow-off bottom. As far as I'm concerned, this is a blow-off bottom, and Litecoin $60 or $58 is insane. But we didn't get a reversal signal here, even though we did get a blow up to 80 to force even a reversal signal here. We didn't get it, so we didn't even get a 3-bar reversal here, which means that at best, this is where Litecoin's going to trade for the immediate future. Litecoin's $60 to the downside, $75 to the upside, and I don't see anything else happening until there's a catalyst or we have a breakout in Bitcoin to a significant level, say 15,000, which will then start to see some rotation back into the altcoins that are now trading at severely distressed prices relative to Bitcoin. Okay. And then we'll see, the altcoins are going to lag Bitcoin. And so we have the same problem here in Bitcoin. We had the opportunity for a reversal signal 2 weeks ago. It failed. So now we're just more of the same, this coiling stuff that's going on. This is going to continue. Again, I make the point, we've been talking about it, I make the point that now that Bitcoin market is beginning to professionalize, that professional and institutional traders can come in and have some semblance of sense of what they're going to do, of what the market can and cannot do. It means the volatility is going to get tamped down because they don't want to buy and move price. So as the professionals come in, the Wild West days in Bitcoin are probably over for the most part, other than during times of complete and utter chaos in the general markets. Okay, so, and that's a good thing. Everybody says that's a good thing. And we need this. We need the chart to start looking like this again. Right? At this level. Not at 3,000 or 4,000, but at 10,000. Because that sets the stage for a run to 20,000 or 25,000. Okay? Because look, the professionals aren't going to be dumb. Once they've gotten their full positions, they're going to let this thing move to the upside. They'll let retail and the Muppets take it, and the Momo monkeys take it higher. They're not dumb. They're just not going to let that happen. It's the Parmesan thing. We will allow no price rise before it's time. So I just need to do my best Orson Welles, which I'm not capable of. Just don't have the deep manly voice. This is my deep man voice. All right. So I could do one of these one day. I should actually do one of these one day in my deep, ridiculous man voice, and it would just be really funny. I don't know if I could maintain it though. All right. I can't. I'm a New Yorker. I'm a little too twitchy for that, and I speak and I talk through my nose. What am I going to do? It's who I am. All right. The last thing we have to talk about is the Dow. I think I made it abundantly clear on Monday that we were probably going to get this. This rally is out of gas. It just felt, and this is purely, I think when I go back on it, I think it's just purely instinct at this point. There's no catalyst to drive the Dow higher here, not even the Fed's lowering interest rates by a quarter point, because obviously the market wanted more than that. The market wanted them to start permanent open market operations as opposed to just temporary ones. Heard from a friend of mine who has friends on Wall Street that they could be doing this all the way through to the middle of October. Let's see if that's true. That there's open market operations in the repo markets that are going to continue through October 10th, and that's absolutely tells you that there's a lot going on here, and that the end of the quarter is going to be a little hinky, especially with the with all the Treasury auctions that are going on this week. So we'll see, and it may even, again, going that far, it may have something to do with Deutsche Bank. I don't know. Again, this is just I'm just spitballing here. So if anybody's got concrete information they want to throw out, please leave it in the comments below. So I can't watch everything. I do try. All right. So this week's bar actually is right on schedule, right? I mean, it's an inside bar. We had a rally. We couldn't break through this area here. We got towards the all-time high. There was no catalyst to take it any higher than that. We got within 100 points of the all-time high. It was a good setup to go higher, but there was no catalyst to take it there. And we talked about this, I think, on either Wednesday or Sunday last week, where the setup here was very strong that we could have gotten a breakout to new highs, but we didn't get the catalyst for it. I didn't expect that with the with the attack on the Aramco facility. So, bing. All right. So interesting setup because on Friday the market closed here. On Saturday something weird happened, and now we had this for the market. And this inside bar here is probably a harbinger of a longer reversal. We'll be watching for some kind of break to the downside and break this low. I did not calculate the potential for 2-bar reversal here. I'm sorry, but we do have 3-to-1 pot odds that we're going lower. Volatility is on the Dow from a range perspective. The volatility on the Dow is starting to drop. It's both of these numbers actually collapsed a couple of points this week, so it's interesting that we're starting to see that we're getting towards this. That these last 3 peaks here are just not that hot. They're not that far away from each other. So this is very the big overarching formation here is very much I don't want to go higher. I don't know what I want to do, and that's what's going on. I think that once we get some resolution as to what's going to happen in Europe and the rest of it, there could be a very, very interesting up move in the Dow that everybody will hate. So just keep your eyes open for that. I know there's so many people who think the Dow is going to drop to 20,000 or something like that, and that would make them happy, but it's not going to. Not when the capital flight is definitely on this, coming towards the United States, not away from it. We're just not in that phase. The Dow might not move much higher from here, but it's certainly not going to collapse. Even in a liquidity crisis, I don't think. I mean, we've already had the beginnings of a liquidity crisis, and did we see anybody selling stocks? No, they're selling bonds because bonds are overpriced. Because bonds are massively overpriced. Stocks actually look cheap relative to sovereign bonds. All right. So that's what I've got for this week. If you guys have anything you guys want me to cover, please leave it in the comments below. We'll continue to do the thing. See you on Wednesday. Please have a great end to your weekend and keep your stick on the ice.